Good afternoon, Matrix traders. This is Alex with actually today I'm going over the stock market. So we'll call it the stock matrix charts and stuff. It's about 2 o'clock Sunday afternoon, too hot to be outside. So I thought I'd do a little video on my old stock matrix that we did all last year and we entered it in January. Some movement today when I was updating the charts, so I thought I'd do a quick video review, WD Gann related, that kind of thing. Again, CBOT man's my handle. I've got a few things on here from again, I'm right now currently doing the commodity matrix, which is the index is on its butt here, but I also keep track of some of the stock stuff. Again, this is where you can go to review the stuff that we do today and some other things. Okay, this is the actual matrix, stock matrix program, kind of all the same. I use the same formula. What I've done, and if you didn't follow, there is probably 50 some videos from the beginning of the end of 2024, and then I did all of 2025, kind of doing this and showing how I use the options. It did all right. I mean, we had a super bear market, super bull market. We made just as much money with the puts as we did with the calls. So it definitely added value, not being one-sided. But you can go review those. You probably have to search for stock matrix. I'm not going to put a link and all that. But this is the same setup that I had. And right now, you can see that the long-term trends, we got 10 are down. Again, if it's long-term, that means I am basically short, right, or had puts on. And there are 7 that are up. Same with the short-term trend. So the trends that are up right now are Microsoft, Apple, Adobe, IBM. Actually, the symbol has changed, BNY. Whoop. BNY. Bank of Magellan, that one's up. JP Morgan's up now. And CTAS is up. Now, there's a few that I consider people fade it, right? They get out of their quality stocks and buy certain ones. I think Procter & Gamble could be one of those. BNY is one of those. ED is definitely one of those. And Coke. Now, they're still down, but they're potentially going to switch. We'll see. But we'll review the charts and the index. Again, since I haven't updated it, let me see. I guess the last time I updated it was January. When I ended it, is at 485,000. So we're actually lower, right, on these 17 select stocks times 100 shares. Again, because one option is worth 100 shares. It's actually lower than it was when we quit the program in January, which was 485,000. So kind of interesting, right? Where the S&P, and I'm assuming the NASDAQ, and I don't know about the Dow, that's always a weak stick, but the index is like the S&P is pretty much on its highs, right? So definitely different when you have these high quality select stocks. I think that you can look at, if you're bored sometime, look up FANG. That's the index of Facebook, Amazon, Microsoft, and Google. Now, of course, it switched to Meta, but it's still FANG, the FANG index. You can look at that and compare it. But anyway, let's move on. This for people that haven't gone through the matrix, that's how it's set up. So currently, we're definitely on the more negative side. Here is Meta. Again, you can see we got, the reason why I'm kind of putting this video out, if you see the red X, that's where I went short in theory. Right now, it's not real because I'm not actually trading it. And so if I forget to mention it, that's the red X, right? So we had a nice little pop. We got long here, got short here, made a little bit. The solar eclipse down here, this dotted line is the support, kind of back to where we got long. Makes sense that we could have a little, if you draw a parallel channel in, right, you probably go back to it. We'll look at some of that on the actual bar chart charts. Here's Meta. Again, just a slinger. The highs were made back in August, so just kind of a choppity event here. Solar eclipse is in the middle of no man's land, but that's kind of been, I'm a little friendly above it, a little bearish below it. I don't like this stop, obviously, right below that eclipse, but you can see here, we got short here already, went long. I guess we did go short here again, so we got spun. Let me add. So, yeah, June 5th, so Friday, we got back short. So kind of a weak stick, right? It makes sense. A guy gets spun up with the small losses. But, again, kind of you got this level of cycle, which is about 19 bars, right? 19 boxes or 19 quarter moons, since I'm using the quarter moon as my time zone. And there's 19, which I like, right? That goes out to the eclipse here. So the solar eclipse. So that would be, if it stays chippity choppity, um, potential the third high, right? Maybe a head and shoulders, depending on how it looks. It could be a new low. Doesn't really matter. It could be a smash. All I know is that's a pretty important one cycle wise. So I kind of like that. Let's go to Coke. Kind of a double top, which is strange. But you know, we didn't have any traps, right? This one was a higher secondary event, so it makes sense that we didn't have any new higher highs. From low to pivot to low was 15 boxes, and this is 15 boxes here. So kind of equivalent, right? For every action is equal but opposite reactions. Newton law. That makes sense that we balanced this low out, now balance this high out, and more than likely somewhere in between is the level of the market, unless you know some fundamentals change and you could go up or down, right? But just on a logical move. Google, now again, I should be adjusting this. I can adjust the speed. I got this at a 1-to-1, just like I do all the rest, but it's so far off the screen. I mean, the problem is I'd have to chart both because I'd still put my stops based on that. You know, and I can, but you can adjust the trend lines, which is the same concept, right? If you keep it mathematical, 1, 2, 4, 8, 16, 32, 64, right? You can also adjust. Again, I can adjust this speed here. Problem is I have to redo the whole chart, so I'm lazy. But this is a all-time high pop, right? So, you know, logical supports down here. The solar eclipse is way down here, which is, I think, if it is a high, and we can confirm it right now. I got short right here, right? Again, because I used 3 boxes. Here are the 3 boxes. This was the 3 boxes before that. So my stop would have been way down here. We adjusted it to here, and then again, you know, since it was at the same level, we kept it here. We were long, right? And then now we got short here. So that's kind of how it works if you haven't followed me before. Kind of a point and figure. Takes 2 boxes to reverse the short-term trend, like right here. This was the second box down, right? So that officially, that's why it's an O there. So just so you know, that's how the setup is. Kind of a point and figure-ish. Here's the Microsoft. Again, powerful pop, but then faded like a son of a gun. Again, another one I should probably be changing the zones. This one had a high in October. So remember October 29th? There are a few others out there that are October. The high was August. Again, both those zones will be important annually, right? Gann's 365, 52-week cycle, whatever you want to call it, the exact annual of that date, whatever the high date was. Both these will be important down the road. First one up is obviously that first week of August. Here's Amazon. Got short here. Actually, should have been here. Again, 3-bar method. So, but yeah, it's acting again kind of toppy. Of course, Jeff Bezos got out right in here, right? Oh, and then of course it went down, and then it went back up, made new highs. So the AI news was wrong. You know, you don't know what to believe. The chart will tell you. It does cause a lot more wildness than it needs to. I think that's part of the AI's platform, is to create bearish news or bullish news at whim, and everybody believes it's real because it's AI. You know, they're not smart at all. They're just a program. Whoever programs them is their agent, right? So anyway, here is the cardinal cross area from the previous high. I kind of like that area, and this one as well. So, oops, dang it. This box right here. So if I'm a bear and I wanted to sell a back rally, right? Or let's say you're still long and you didn't get out where you should have because you forgot to have the stop in, you know, I would put it right in there, probably at 257.50-ish, somewhere up there. Or buy 250 puts or something like that against your positions if you were collecting dividends or something like that, right? But if you do that kind of play in any of these stocks, I would definitely go out probably go out to December. That'll cover a lot of this crap here and the October timeframe. If we do make a hammer dog low and you do have puts on, obviously August and October timeframe, I'd be bailing out on those puts and then open up your risk again at that point. I don't want to get into the actual mechanics of it. If you don't know, you have to do a little research. Or go back to my 52-week videos, or 50 videos that I did last year on the stock matrix that goes through week by week, basically. All right, stops up here. Have a good long position. We got long approximately here. The stop is here, so we're going to make a little. This is an outside period, a double. You can't really see it, but I think we went down first to knock the short-term trend down. Then we spun up and made a new high, right? 2 boxes that kicked it to the trend, short-term trend, which is this one right here, up. We faded. So basically, it's an outside moon period. The interesting thing about this moon period is it's been on the weekend, except for this next one. It's on Monday, which is the 8th. Now we're also dealing for you traders, your math guys, um, on numerology. This is a numerology day. Actually, it's it was a Saturday, right? 666. That's June 6th, 2026. You know, stuff like that happens once a year. Sometimes other events you can calculate, right? But just a simple numerology day. It's amazing how reactive that is. Now, again, we got an extra day in here, and there'll be one less day on the next one because I believe the next moon period then is June 15th. What's that? Still Monday? June 21st. Yeah, that's back Sunday, right? So we have this one will be a pretty short one. We'll only have like 3-4 days of actual. Of course, that's the beginning of summer as well. So the equinox. So, but anyway, stops are here. Pretty good market. Apple's pretty solid. Acting like it's undervalued. And again, if that one I consider a little bit opposite of the like the S&P or Nasdaq indexes. It's a safety play, similar to Coke and some others, I believe. You know, these lows were a little different, and the highs are always different than the Nasdaq or the S&P. So it makes sense that this is more of a safety play. Tesla was looking pretty good until Friday, just like a lot of these other stocks all got cratered. You know, silver got cratered, gold got cratered. Commodities in general are on the downslope, giving up a lot of cash. Now, unless you're short, right? But this one got tripped. There's our 3 boxes right here, right? These are our 3 boxes. Stop got hit there, and now here is our 3 boxes here. So our stop is above that. Yeah, I actually put it on the wrong one. So our stop is here, and it'll get moved to here after Monday's trade. But we're coming down into support. This is that cardinal cross area from this little swingy. So now the squaring out of the range, again, this one from the low, which I won't go back and look, but this was a good one, and it squared out time and price, as Gann would call it. Now, of course, this squared out time, all these hit time and price as well, right? But once the swing cratered, you know, especially here, we broke this previous pivot. This pivot is the big measuring stick, so I like that. I like this measuring out. However you do it, I do it times 5. But this pivot down here is pretty key. Once it was proven. Now, again, I assume that, right, because we were closing below the solar eclipse closes and all that. So, to make a long story short, I like this. Tesla has a little bearish activity. Now, if you're buyer only, which a lot of people are, find spots that make sense technically, because again, it is negative, especially after Friday's close. This 375.60-ish is a good spot. There'll be a few stops right down here at 361. Now, again, don't be a hero. Don't stay in there. Now, some people cost average down, stacking. I hate those words. I've never traded like that. I don't know. They've been lucky in the stock market that we haven't had a 10-year bear. I mean, commodities do it all the time. So you can't stack sweet. You know, you have to get lucky, right? Because you got to roll, you got spreads. It's just a mess. You know, people do it in silver because they're doing 1,000 measly ounces of silver. Whoopie fucking do that day. It's 5,000 ounce contract. You can average out 5. I mean, I got guys with bars of silver from the 70s. I mean, I told them, I said, take one of those bars in and see if the pawnbroker has $250,000 laying around cash. Don't take a check. So anyway, it's always interesting, right? It's such a small deal. The internet's just full of stackers and videos, and they're telling you how far up it's going to go. And Tesla's kind of the same thing. Pretty bullish Tesla because of the robots, right? They've kind of got the first step. I don't want to get into that yet. Here's Lynn. I believe it's hydrogen play. I tell you what, this whole action, this upward bias here, is like it's undervalued. It's near its highs. We'll look at it closer on the actual chart. I mean, it got short down here, but I mean, I don't like that. I mean, I'd never take that in a million years. Now, if I would, I'd buy a put in Lynn. I wouldn't take the actual 100 shares short, or even one. Now, maybe if you were long from down here, right, which it did, you know, it got long right here. So it was a great trade. But something about this, and maybe you get out of all your shares and you look at maybe out of the money option play. You know, I call it quantity over quality. So you buy several out of the money calls, maybe up here, this 550-ish area. Because again, we know that this range to the downside was 58 boxes. This one is 75. So again, in my opinion, you double that, right? So that'd be what? Say 60 would be 120. Mathematics would kind of tell me around this, we'll round up and say 600 level is kind of my thought process. So 550 out of the money calls. You go out, I don't know, 8 months or something. You got to go out a little bit because you're doing it on the cheap. But you buy all the money calls. Maybe go out a year. You might not need all that, but you might. Now again, if it gets below that, I'd blow any out of money calls that you do. Again, quality over quality. So you buy like 5, 6 of them, right? So you can get out of 3 when you double your money, that kind of thing. Because again, this action here does not look bearish to me. It's like it's undervalued trading. Here is Edison Electric. Good thing about these electric companies like this, these utilities, is if they lose money, they just charge it to the customer. It's like, okay. I mean, I used to have KP&L. No, what was it? Yeah, KP&L back in Kansas here, and I think they're defunct now, but now it's Kansas Gas. But they had a hedging charge on there. Of course, it was a loss. It wasn't a profit, so we didn't get to share in the gain. And I called them. I go, so you're having hedging losses on your deal, but you have never made money hedging? How's that work? If you don't, you better fire that guy. Anyway, that's just my beef with the utilities now. But as an investment, that's why they're always a solid green lighter, especially on dips like this. We're dropping 15, 20%. They're kind of a safety play, right? You can see stock market was making highs or lows in here and highs in here. It kind of faded the trend on the bigger indexes. So we're short with a stop here, which I like. You'd have to break this trend line down. This is a 1-by-1 trend line. 1 quarter moon for 1 square of 9 down. Here's Adobe, kind of been a slug. I think fundamentals are looking bleak for Adobe unless they get into something else. The PDF deal is pretty much a baked in the cake kind of deal. They need to get into something else, right? Because again, they have good salesmen, they have a good platform, but they need some newer stuff, AI stuff or something. Everybody still uses Adobe, but they're not benefiting from it. A lot of governmental contracts, that probably got caught up in the Doge situation, that kind of thing. But anyway, this is This is 18 boxes over. I'm just going to do a quick analysis here. Here's 18 boxes over. So it makes sense that this was a low. Let me see what this shallow rally was. Go all the way out to here. That was about 11. Here's 11 here. So again, kind of the same weight. That ain't right. Hang on. Dang thing's in my way. Oh, it's 7. Okay, that's the vertical. 11 up was right here, and that's 7. So that was the same diameter or whatever circumference of that square, whatever it is, time-wise and price-wise. There's this box down here now. So it did break out of that time and price. So that's a little more friendly. But solar eclipse is right there. Kind of put the squash to it. Just like the solar eclipse back up here, put the squash to this rally. Just couldn't get above it, I guess. Until you get a close above the eclipse, stay out. If you have to buy, I'd buy new lows or challenge of those lows, that kind of thing. Because again, we did it here, failed, then boom, down we went and made, which we already did, I guess, here. Anyway, I just don't like Adobe as a long-term buy, but if you have to buy it, I'd buy new lows somewhere. Again, though, here's the issue, right? It cratered. You can go back in the chart. We'll look at that here on the bar chart. Here's IBM, just kind of a cheat and fricker deal that some bitches, they fly around. I would never buy IBM's AI platform, whoever that is, whatever it's called. I think they use it to create market chaos. I think they dwell on that. Their whole thing is set up to have big, weird flying moves. Just stupid, for in this day and age of smart computers. They got the dumbest one out there. But again, maybe the makers want chaos because they're trading the shit out of their own stuff. Whatever it is, that is just a weird, look at that range. Jesus, now, I don't know. That's just, I hate it. Now we had a bear trap here and we had the bull trap here. So we don't have to do the trap anymore. It makes me a little more neutral to bearish on IBM. Here's Bank of Magellan. They did switch their symbol to BNY. We have an outside day, but outside moon period up right now. Now we got one more day left. I'm assuming, again, one of the safety plays that this makes a little sense. It's been a great bull market, man. Don't know much about it. Maybe it's Trump's bank. Who knows? Procter & Gamble. I actually bought this trade. It popped out lows. Again, a bear trap, similar to this one. I kind of like the sequence, right? I like this pivot too. I do that times 5. Let me see. That is 8 bars. So I'm looking at 40. 40 puts you out here into the next moon sequence. And I also take that times 5 price-wise. So we have 30, let's call it 30 boxes up. So it's easy math. That's 150 from the low. So let's go up 150, see where we're at. Probably unlikely. Probably have to figure out something else, but that's 310. So that would, well, that mathematically would make sense. But Procter & Gamble's kind of been a safer play than that. Not as wild. They got caught up though in the food problem and the dyes and the new administration cracking down on that shit. So they had to retool everything, and maybe they're ready to go. Here's JPM. The diamond stops are here. Got long here. We did get above the solar eclipse. Don't know where we closed Friday. I didn't mark that correctly here, but the solar eclipse is resistance, and if Monday we can close above this, close up here somewhere or higher, I think that's friendly. I like the backside hit, right? Now, if this is a high here, that's going to be troublesome. This is your main pivot then, right? Confirm if we ever make a new low down here somewhere. That's the confirmed pivot, and this is your measuring pivot, and that doesn't look good for JP Morgan if that's the case. Now, again, I have no idea. Here's Coinbase, kind of a similar deal as Bitcoin, obviously. I used Coinbase back when I did the stock matrix because I couldn't find anything with options in the Bitcoin. The Coinbase worked. It wasn't exact. They made lows and highs at the same time, but the prices were totally different. I believe on this rally, Bitcoin was making a new all-time high back in October of last year, and we only got up, halfway. So totally different, but it's good. If I didn't want to open up a separate account, tell people, oh, switch over. Again, it was more of an instructional videos, which they all are. If you take my word for anything, you're stupid, or anybody's, or any AI platform. Don't listen to them. Just let the chart tell you this broke trend, got smashed. Coinbase is in the throes. We know Bitcoin made new lows, so if you have to buy it, I would buy it down in here somewhere, kind of a trap. We had a few little trappies there. Let's look back at the high, see if there was a trap. No, didn't. So yeah, so I would be careful on this one. I think Bitcoin could drop into the 40s. I have it on the last video I did. You have to look it up. I think which was Monday, or no, I did it Friday. This last Friday, just a few days ago, on the matrix. Here's CTAS again. I like this trap. I did actually buy this one. Um, good old company that have been propped up by BlackRock and the bunch. State Street. They protect all these favorites of theirs. They hide the data well. If it is bearish, they protect it, right? So, but they got out. They got hammered. They did a big stock split back last year, and it dropped 20%. Not too long after that, it went up, made a new high, and then we're back down here. So it's pretty typical. Kind of I like the distance between here. That was 7, and here is 14. So it could find a high in here and drip back, and maybe make a right shoulder. I'm going to get out up here at the solar eclipse if it would want to generously give me that trade in a short period of time. I bought it here when the system actually went long. So, all right, now let me switch over. I'm going to switch over now to the bar chart, and we'll flip through the charts there, which are more of a daily, weekly setup. Hang with me. Okay, we're over here at bar chart, which I use their free service because I'm cheap. I like them. If I had to pay, I definitely would pay. I've got a watch list set up of some stocks. I think you get one free, or maybe I've been in here so long, I think I kept one. I think you only get one now. But you go up here, and once you got your watch list set up, you hit flip charts, and you go through them. I'm going to get rid of the volume. Let's see if we can see everything. Looks like it. Okay. So this is, we don't want CRISPR. Here's NVIDIA. Now again, this is the matrix zone. You can see I drew it in. This is Gann's big zone that he always predicted bull markets and bear markets. All his famous forecasts, he based it off solar eclipse close and 90 degrees. Now I'm using market days or bars because we have so many more holidays now than Gann did. It equals out to be about the same, maybe a few days off either side. But I like 11 then, 22, 33, 33's half, right? Or 45 degrees on the wheel or whatever. So, but anyway, this is the solar eclipse. If I don't mention it, I think I might have deleted some because I did a lot of videos. But primarily, May 21st was the end of the matrix or the end of the Gann zone, 90 degrees. So, and we went back up, tested it, failed again, which makes me nervous on NVIDIA. Again, level of support. The green is the current solar, the one that we had back here on February 17th, and this is the one, 7 months ago, 10 months ago. Well, let me see. I'll get you the exact date. Dang it, can't see it. It's back in here somewhere. Anyway, it's the older one, right? The previous one. So green is current, red is the previous. So now we got another one coming up here in 90 days. So we'll reload that one when it comes. All right, there's Meta. Again, we went, this is solar eclipse, right? This little arch, this was the day, and that green dotted line, we hit it twice, failed, boom, knocked it out, chopped, chipped, gaps. Gaps are stupid illegal in the world of AI nowadays. You know, you can pull up any stats and do anything, and this is really gaps, really gap, 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 gap. So again, I do believe these AI, Grok and Claude and all of them can be created to, especially when you're predicting stocks. It bakes something in there to cause these gaps a little bit. All right, let me move on. But anyway, you can see just chipper. We've been at the same level since October, so you know, I mean, and this is November, right? So dud, but a mover. So great trader, sucky for anything long term, moving averages or anything like that. You'll lose on those kind of trades. Here's Coke. I don't know what happened here. Closed on its ass. Actually went short right here. Popped up, faded back in the eclipse. It did not close above this eclipse here, the recent one. So it looks a little negative, but again, this is one of those safety plays. Options only, probably cheap. A couple $100 you can buy it at the money for, you know, out a month. Here's Google. Got back into the gap. I don't think we filled it. Doesn't look like it, but that high just looms. The level of support obviously is eclipse down here. Got a lot of uncovered closes, a lot of targets ripe. The previous solar eclipse I like because this is the pivot where all the stops will get hit. So, but that would be a pretty negative pullback. Here's Microsoft, had a pop up. Solar eclipse again, hit it, hit it, hit it, hit it, hit it. So I'm assuming we're gonna hit it again, maybe take it out. I don't see the other one. I must have deleted the other eclipse line. But this makes sense that we'll probably nibble this out. There's an uncovered close there, 391-ish, somewhere down there. Here's Amazon. New all-time highs. Did not have a trap. Did not have a trap here, so it's not, and we did not have a trap here, right, or here. So again, it's telling you it's not a trapping market so far. It might turn into one, but right now, you assume you're not going to make new highs. You assume you're not going to make new lows. So the levels of support are more honest and trustworthy, potentially trustworthy. So again, obviously, I think we'll go down into here, maybe all the way back in between the two eclipses and fill in this big old gap. If it turns into a negative there. Apple made a new high, kind of a diamonding kind of, let me look at it on an hourly. Let's look at it 1 hour. Yeah, it's got a diamond patterns are rare, but when you get them, it doesn't quite set up but that way, but it's got the same premise, right? The big pivot, a big outside event. So you sell it here, buy it here. Pretty simple concept on the diamond formation. Tesla got absolutely thrusted down. I did some work on this 2 hour chart. I'm actually trading it. So, and you can see I'm short, right? So trading Gann's 2-day trendline indicator actually. So this is representative of how I trade it. Basis again, we did not have 2 consecutive days up on this rally, right? So there was no trend up. 2-day trendline indicator. There's no trend up. Now it's 2 hours, so 2 bars, the same thing. We didn't have. Now we had one here, and then you know it didn't really have 2 down, you know, until. But once it made a new low, actually, if you'd have been doing it legitimately, you'd have been drawing the line here, here, here. I know. I mean, I don't look at it every second of the day, so I just fill it in at the end of the day. So waiting for a swing back, and then another drop down to more appropriately put the stops in. You know, 100 shares. You know, 40 grand. Pretty steep options, you know, aren't cheap either, but they're definitely manageable. We did real well on Tesla on the stock matrix system and that we did for 1 year. Let me see. Here's a weekly. I'll give you a crunch view. Yeah, we started right here in the Aslow, so we took a loss right away. Oh no, that's December. Anyway, most of these we took a loss because I had to go with the direction of train at that specific date, wherever direction. But you can see these wild throws. The system did really well in the options. You know, that's a smasher, right? That's 70% or whatever it is. Not uncommon for all bulls to retreat back 50 to 70%. That one was 55, 56. You know, that's a, people go, oh, I want to stay in there forever. I don't understand that mentality, or 75. You know, so again, you're holding on to a market that moves 70%. You don't get out. I don't understand it. I can't do it. I'm not a stacker though. I sold silver at 60 or 50, 70, got out and I'm flat. Now I might miss the $400 move though, because I don't have any cash silver left on my little pittance of amount. Of course, if you're selling a 5,000 ounce bar, it makes you stand up in attention a little more. But anyway, this is a pretty interesting chart. We did have a trap here on Tesla. So I'm expecting a trap down here. I know it doesn't seem realistic to get way down here at this 209 level. Let me just double it out and see real quick. See, time-wise, we hit it perfectly, right? So just a little homework. Again, this is a weekly. That exact time, well, I guess I had it off a bar. Let me redo it since everybody wants to be exact nowadays. I'm never exact. I pride myself in not being exact. I lose money when I'm trying. Back in my, after 4 decades of trading, man, back when I first was doing Gann stuff, man, I had it down to the rat's ass. Yeah, it was this big bar up, so kind of confirmed this low. That's 16 weeks, but the price is down here, right? So now, of course, if you're trying to be the secondary events is just as important, and you can see that pointed to it also from this pivot up there. Let's see. Yeah, that would project a smash here next week, so probably highly unlikely. I think it can, but it's odds are it won't. So more than likely, we're just in the chippity chop phase, setting something up. Now, of course, it could definitely go down and rip this out just for a stop, getting a deal, and then back up into the range, right? No big whoop. Fundamentals are, I believe, are kind of friendly from what I've gathered. Again, just my real research, not AI. The robots, definitely Tesla has the advantage. Had some issues getting some silver, hence the big silver pop up. Now this is the one that's catching my attention. It's acting, this whole range right here was actually a quiet, unassuming break, right? Which is what you want. You want to catch those that have these unassuming breaks, not big rippers. Again, I call it trading undervalued, right? There's something mechanically different about this than like say Meta or something, or Amazon or IBM for sure, right? There's something going on here that makes me get an inkling that we're undervalued. This right here, again, I'm looking at a weekly. Let me look at a monthly. Maybe you'll see it better in a monthly. Yeah, it just cannot make, it just keeps creeping. This was a great buy, made a new monthly low by a few ticks, and the solar eclipse is right here, and then it went right back up. So again, to me, it's trading undervalued, and I think quantity over quality, because that makes me bullish as all get out, like there's some big event down the horizon. Excuse me. And this is an ascending beast. Now it's not proven yet, right? But that's why I like the options here. Do quantity over quality, maybe 5 options. If you do 100 shares, you're talking 50 grand, 51 grand. Maybe take 10 grand and buy 8 calls instead of buying 50 grand, 51 grand of actual shares. That kind of thing, right? That makes more sense to me. Because again, I believe it's worth you go out. Again, we know how far to kind of go out. Here was our throws right here, 54 days, 31% up. Let's do a dupe on that and then run that from this low that we just made. Simple stuff, right? I'm not trying to be a rocket scientist here. I'm going to keep the actual, not raise it up, because I want to be short. I don't want to be a greedy pig, because we know pigs get slaughtered. August 14th, that's not that far away. So we got a time frame to use. Maybe go out to September options, right? And maybe buy some 550s, playing it up to 6. Quantity over quality. If you put on 8 of them, you get out of 4 when you double your money plus commission. If you pay any, then you leave 4 on. Maybe get out of 2 more halfway and leave 2 on and be a greedy SOB. So that's kind of the theory, right? Of quantity over quality. Again, this is such a meager correction. You can almost see the stair stepping, right? Using a little chart art here. We can project, right, the next markets and patterns based on, I call it chart art because it has no real meaning yet. And then of course that would mean we want it to equal something that makes sense, probably 100%. Again, I'm getting way out in the weeds here. This is my pointer. The red dot at the end of my gun, there's 100%. This is how I do things when I need to know what option to buy, in particular, what speed zone, right? There's 100%, there's a dot of the gun. These might be incorrect. So, but it's kind of close, right? It's within a day or two of this pivot. So this time frame makes sense to me in middle of August. So September options will work. And if you want to go more out even further on options, you could definitely go out past, do February 2027 options. I don't know if they consider those leaps anymore or not, but if they have them, maybe only quarterlies. Might have to go out to March. That's be fine. But I think if you get up to this target, whatever options you buy, whatever time frame, this is your bailout point. At least get out, if you do 8, get out of 6 if you hit this objective, and keep 2 on to be really greedy, that kind of thing. Anyway, I don't know, I got off on such a tangent, I apologize. Let's move on. Here's the ED, again, kind of the safety play. We did have a trap up here, a double trap. You know, we took out this high, this one also, and then we took out this, so I consider that what I call a double trap. Head and shoulder top, here's your pivot. That's pretty ugly. It did a break back appropriately, and then we had a big day up Friday, opposite of some of the others. So again, I call it a safety play, right? Opposite of the indexes, the NASDAQ, the Dow, the S&P indexes, or the FANG, or whatever index you want to look at, especially the FANG, because that's kind of what mine represents. The FANG index is the top quality stocks that people used on a daily basis. Here is Adobe, the dog with fleas, back up to the eclipse. I'd stay out of Adobe. I should take it off my deal. I just don't like it. It's great if you want to buy puts deal, right? That's Adobe's a good one on that. It's what 6 years off its highs. Definitely in a bear market. Now maybe they'll create some new technology. That's what they really need. They want to stay afloat. No different than Kodak didn't get onto the digital age and they went toast, right? So you don't want to be a Kodak. Anyway, here's IBM, the cheater market. Obviously, this is your objective. If you did sell this poke, we had a trap, had a trap, had a trap, had a trap. You know, so this had a trap. These are all. It reminds me of trading that gas. I cannot. I made money on the matrix. I do not know how. I mean, because we're trading options, I guess. But man, what a cheater! I don't understand it. How do you have gaps in this day and age like this? AI is not turned on, or what? Or if they have an individual human doing their what their company's worth, you know, their stats, they suck. Fire them, Jesus. Fuck. Have Claude do it. They, you know, show you exactly where you're at. Sell your seasonals. For Christ's sakes, just don't make. I think they want it anyway. I'm beating a dead horse. But it's a great trader. You know, flip on an hourly chart, follow the trend. If you're a buyer only, don't sell it. You know, but you got to take profits. You know, have some rule. You know, 15, 20% rule. If you make 20% 5 days, get the frick out and just stay out to give you another buy signal kind of deal. Lower than what you got out at for sure. That kind of thing. Here is the new symbol BNY. It was BK. Again, a safety play. You can see it, and it's been a channeling son of a buck ever since this long coagulation. Once it broke out right here, and it's been nothing. You know, you have your ups and downs, right? But man, what a channeling. You know, I hate to waste it. I don't know how many people are trading BK or. Let me do it down here. Extend right. Oh, hang it. There it is. Now let me duplicate that. It just doesn't matter kind of stuff, but you can see that the parallelness is pretty obvious. And, you know, a break back those long ways, so make a little sense. Don't buy strength on Bank of Magellan, a bank stock. And I don't see it doubling from here instantaneously. Now, it was 50 bucks here and then 100 bucks here. It took a year, right? 2 year and a half, but it definitely did it. Will it do it again? I don't know. It's already kind of up 50% from there. So I would prefer to buy a coagulated break like this. And if you don't get one, there's like a zillion other stocks to trade. Here's Procter & Gamble. This is the one I actually bought personally. I'm not a big fan of Procter & Gamble, but I like the trap that it had, coagulation. I bought it down in here. System went long too, so that kind of helped. And again, trap here, a mini trap here. I'm going to assume it's going to take out this pivot. Now that'd be bullish. I'm not going to hang on that long. You know, I might get out of a few shares, you know, here, maybe up in here, right? To kind of play it out, or buy a put against it. Again, they're pretty cheap, so you can definitely trade options in Procter & Gamble. Here's the diamond. Just a chopper, but an upward biased. Keeps making new highs as we go. 65% right from this low. So, you know, the last break was 28%. Again, I'm not too concerned about time. It didn't get there. No. So, again, that tells me it's undervalued a little bit. You know, this is kind of a break that it had, percentage-wise, maybe. Let me get rid of that freaking thing. 68, 66 market day break. Boy, I like that. Huh? Yeah, you can see it's almost, you know, not quite. You know, percentages are totally different, but makes sense time-wise, right? That this break was in the cards. So, 65. So again, the point is, I got sidetracked there thinking about stuff. But this little decline is what you're getting. You can see the end result though. Boom, boom, just creeper. This is where you turn on flag patterns, coil patterns, little hesitational patterns that you get when a market is or a stock is undervalued, or commodity, when it's or crypto. You get when it's undervalued, you get little flags, coils, all the way up until it finally collapses and it takes out one of those with a finale. Right? That doesn't mean it's over like this one. It just had a correction. What's the definition of a correction? Correction is actually something that breaks something. If you don't break anything, it's not a correction, right? There is not a correction here. All the way up, there's no correction. This is the only correction we had. We broke the uptrend line, broke the swing. Two of them. So that's a correction. These were not corrections, right? This one maybe because it did have a 1, 2, 3 kind of look. So again, nice setup for a continuational pattern. And I'm not preaching on the diamond. I think Jamie Dimon has been an asset to the company overall. I don't know if I know the guy enough to consider him personally a good guy or bad guy. All he has to do is provide for his shareholders. I don't know. Don't want to get into politics of that too much, but there's a lot of conspiracies running around about Jamie Dimon. But the end result is what you want, a creeper, and now it's potentially going to have maybe a pretty good acceleration. You can see how long this one was once it, again, I'm getting a little off track, but that's why I'm going to do a longer video on this because I won't do another one for a while. And you can see, right, there is your red dot at the barrel of the gun, and you can see that this drawn over is a duplicate and almost hit support there. Again, I'm not real accurate on this, but the objective then, if this is a similar rally, it's only 87%. This was 173%, but that'd be up there projecting a high around 375. We'll call it, round down a little bit. 375-ish is the projected if it's equal to this leg, which we've already rallied some, right? So 65% of it's already taken off. So now you would have never, maybe the earliest you'd have got in was right here on this gap, right? Because it broke this trend, broke this swing. I ain't drawing it in, but that's where you would have got long at the fastest, unless you guessed. If you're waiting for the trend to change, that's where you'd have got long, which still would have been a pretty good profit. Let's move on. Coinbase. Now, again, we did Coinbase because I couldn't find anything in Bitcoin that didn't have to open up a special account to trade puts and calls on. But you can see a trapper market. We have a trap here, and we had a longer term trap here, but we did not have a trap here. So I think it's either one, right? Now, we did go up and take out these highs, and then boom, right back to the solar eclipse and beyond. I got to assume we're going to take that out just because it can. Now, based on this previous ones, not by much. More of a maybe a buying a call kind of deal would make sense to me. Even if you didn't want to wait, right? Again, you might want to base it more on the Bitcoin chart or something. I think so. I'm going to assume Bitcoin's going to make a new low, or maybe it already has, or some of these other cryptos. There's a shit ton. But anyway, and that's part of the stock market's decline and the commodity decline. There's so much investment money getting spread out. The stock market is still the big dog. It's protected by everyone. So, all right, let's move on. But anyway, I'd be buying calls on that new low down there, or maybe even if something else came along, I'd be maybe buying calls before that low came in. Go out in about 6 to 8 months out in the future. Here's CTAS. I got some lines on here because I am actually trading this. I did buy this down here when the system bought it, and that gapped up. I don't know on what news, but I had Claude run me a thing on 90 degrees. I wanted to double check his work. Anyway, it definitely got a nice bottom. It did. We had a bear trap. Why I liked it. It was on my radar, and then I went with the system once it went long. We had a trap here, little trap here. Didn't have anything here. Didn't have anything here. Obviously, I'm getting out up here on a few and a few up here because I'm not a long termer. Especially when you got I like bear traps. Don't get me wrong, but they're pointing to something downward, right? So I'm not a big fan of hanging on to a declining view. I'm getting off track again. This is gonna be a long ass video. I'll speed it up somehow. Okay, let's run a parallel. These are the parallel of that. You can see it kind of hit that, nothing there. It did hit that secondary high to this one. So again, it's proving out with just a quick rough that this speed line is important. This is the parallel channel, right, of that speed. Make it red. Red truck. Okay, so now you can see a little more, and I'm going to leave those. I don't need these in here. Hang on. I already proved Claude right. So again, just to kind of as a quick one, you can see And of course, I had this other one drawn in from something else. Maybe it was a parallel already from this, but you can see that that proves out the importance of those. So if you're, I'm looking for areas to exit. That one was too quick, so I wouldn't have put that one in. But obviously, this one will be interesting, especially if it takes a little more time. I like this one too. This is the main pivot, the pointer, but we've already hit it. So yeah, I think I'm gonna probably get out up here. It makes sense, right? I'm just a trader on that thing. All right, I'm gonna sign off again. Um, This has been a little review of the stock matrix program, both charts that I used to do. I did them more related to the options, right? But the reason why I did it too is you can just see here, June 5th, June 4th, June 1st, June 2nd, June 5th, June 1st, June 4th, June 4th, May 26th was not that long ago. We had a lot of changing of the trend. Something is up, something's a little different. I just wanted to bring that to your attention. And again, if you're a Gann guy, you know the importance of this 90 degrees past the solar eclipse. So that was the bull market projection zone, and now we're what, a couple weeks off of it, right? So we're feeling the effects of that event now being behind us, and now the next focus will be the next solar eclipse, so which is August 12th. So again, you can do your 90 degrees, your all the degrees out into the future. This is the 33, or excuse me, the halfway point, or 45 degrees. Again, there's from solar to solar is 90 degrees on the wheel, or on a calendar. So this is the halfway point, and this is NVIDIA. You can see it actually hit the halfway point, and now we're down here, right? So this is the post effect. Now the grains, or all the commodities, did the kind of the same thing. So it isn't just one realm; it's multi-sectored. So I'm assuming, I don't do a lot of Bitcoin stuff. I mean, I do Bitcoin only. I don't do all the crypto stuff. I'm going to assume it's probably similar there. Money is leaving. Basically, what you got to just know. And somebody's short and making money, right? Somebody's long, staying too long, being greedy. A lot of these markets like silver, we haven't reached the fear stage yet. We're still in the hope stage. So the fear stage is when you really get bloodied. And those are the ones you watch for if you're in the know. All right, I'm going to sign off. Everyone have a wonderful week. Next week, again, this is Sunday, 3:06 in the afternoon, June 7th, so 2026. So we're going to see how this all pans out. If the big dogs that I got here, these are 17 select stocks, if they start finding a bottom, then markets like Coke, ED, Apple, probably Procter & Gamble, I can kind of consider four of them are opposite. Those will actually probably go down if the stock market found a low Friday. Now again, the moon comes in at 10 o'clock-ish on Monday. So kind of a weird deal, but it's in the trading hours at least, 10:02. So be a little careful on that 10 o'clock time zone. And if you're a trader, flip it on. See if there's anything interesting out there. All right, sign off. Everyone have a great rest of your next week.